This is a story coming out of the BCC where they're saying that many of their members are thinking about how they will cope with the potential disruptions that could exist around border issues and customs issues March 2019 or perhaps later if there is a transition deal. We're getting into the meat of things now, aren't we? The BCC said yesterday, this month we need a transition deal. Does it feel that way to you as an economist? Are we getting to the rub here? Are we getting to the facts?
I think the long waiting game is coming to an end. Businesses are, we're well into this next sort of short-term business cycle, and therefore businesses do need some certainty. And because they're not getting it, and they're not going to get it for several months, given the standoff that appears to be developing between the UK government and the Brussels position, particularly with respect to contentious issues such as financial services, businesses have started to take the risk on their own balance sheets, and that will have a huge impact, I think, on investment decisions, on hiring decisions, and it will probably spill well over. But I think at this point for the markets, the question is, we have assumed in models for so long we're going to have a smooth Brexit, a smooth transition. The reality, the economic reality that comes after, however, remains anything but certain, and especially for the City of London, for financial services, I think it's coming home.
When you look at Donald Tusk's comments yesterday, and of course this is negotiating positions, and we start at very divergent, polemic positions, really. He says he understands May's political desire to demonstrate that the best Brexit is possible, but it's not our objective. You actually say, it's that the EU overestimates the weakness of the UK position. Why?
Well, the UK government gave a sort of a non-tariff guarantee. I mean, it's a form of a financial subsidy, basically, a fiscal subsidy to the UK auto industry early on, right at the very start of this, before actually negotiations began. And that that clearly sort of alleviates the pressure on the UK government to actually reach a trade deal with respect to a key sector. So a sector-by-sector sort of arrangement can actually be made unilaterally by the UK government, which means that probably the potential for reaching compromise, being pushed towards a compromise, is weaker. At the same time, the fact that the EU draft yesterday excluded financial services was, I think, such a big shock, because it basically sends a very clear message. Now, let's not forget, the City of London is a global and European financial centre, and it is the biggest European financial centre because it's got the advantage that other centres like New York, Geneva, Zurich hasn't got, and that's passporting right. And that's coming to an end.
And that's the argument that
and just briefly then, yes, exactly, Hammond making the point that fragmentation pushes up borrowing costs across Europe. Briefly, Lena, do you buy that?
Well, the fact that the EU have been, across the channel, there have been so many comments that I've heard in recent months. The EU are concerned about that very cost